Welcome. We're looking at some pretty significant legislative material today. There's this comprehensive bill and also an analysis piece from Healthcare Innovation that digs into the CBO estimates for the healthcare parts.
That's right. And there's a lot in these sources. Our goal here is really to pull out the key insights, help you understand what these proposed changes might actually mean.
Exactly. It's dense stuff, no doubt, but we'll try to make it clearer and focus on what really stands out from these documents. And hey, if you find this useful, please do take a second to like and subscribe. It genuinely helps us keep doing these analyses.
Okay, so where to start? I think first you just have to grasp the scale of this bill. It is, well, it's massive. It's broken down into these different titles, and each one covers a pretty distinct area of government or policy.
And it really spreads across the board, doesn't it? Not just focused on one or two things like you might sometimes see.
Exactly. I mean, you've got titles covering Homeland Security, federal government operations, transportation, the big Ways and Means title, that's where a lot of the tax and healthcare stuff sits, but also natural resources, defense. It touches on so many different government functions and a lot of the executive branch departments.
Right. So maybe the best way to think about it is how it affects different parts of the government and ultimately people's lives.
Yeah, that's a good way to frame it.
Okay, let's maybe start with how it impacts the federal government itself, its employees, and how it operates.
Sure. So the bill has specific sections that deal directly with federal employees and, government functions beyond the big tax and health headlines. Title IX, for instance, that's focused on federal government operations.
Yeah.
And in there, you see proposed changes like getting rid of the FERS annuity supplement for certain employees.
Okay, hold on. What does that mean in practical terms for a federal worker?
Well, the FERS annuity supplement, it's basically like a bridge payment for federal employees who retire before they're old enough for Social Security. So taking that away for some folks could really change the math for anyone thinking about retiring early.
Okay.
And for new people coming into federal service, the bill suggests allowing them to choose at-will employment instead of the usual protections, and also potentially paying lower contributions into the FERS retirement system.
So that sounds like a pretty fundamental shift for new hires, both in job security and retirement planning.
It could be, yeah, that's what's proposed. Then there's also talk of introducing filing fees if employees want to bring claims or appeals to the Merit Systems Protection Board. If they want to challenge something like firing or suspension.
Yeah, adding a potential cost barrier there.
Could be. And it also touches on the Federal Employees Health Benefits Program, FEHB. Things like putting in measures to verify who's actually eligible for coverage. So taken together, these are some potentially pretty substantial changes to how federal employment works and how employees interact with their benefits.
And beyond the workforce itself, how does the bill target, say, specific agencies and what they do?
Oh, it gets quite specific there, too, directing funds and operations in various departments. For example, under the Homeland Security title, you see money earmarked for things like border security technology, biometric systems, and also grants to help states pay for their own border security efforts. So that directly shapes DHS's budget and priorities.
And you mentioned other departments, too.
Yeah, the Department of Justice gets funding linked to immigration matters. The defense title, that appropriates money for very specific programs, things like missile development, buying certain vehicles, military construction, even support for missions at the border. And then in areas like natural resources, the bill lays out specific rules, fees, and sometimes even pulls back funding previously allocated for energy production, covering oil and gas leasing, but also things related to renewables. That impacts agencies like the Department of the Interior, Department of Energy, basically changing how they manage federal lands and resources.
So we're seeing potential changes hitting individual federal workers, but also very direct instructions and funding levels for major departments: Homeland Security, Justice, Defense, Interior, Energy. It seems like this bill really digs into the structure and the operational side of the executive branch.
That's definitely the impression you get from reading the source text. Very specific legislative language aimed at how these agencies function and what money they have to work with.
All right, let's pivot then to that really big title, the one covering both taxes and healthcare. Maybe start with the tax provisions first.
Sure. So Title 11, Ways and Means, is where a lot of this lives. One whole part is focused on tax changes presented as helping families and individuals. This includes tweaks to how the child tax credit is calculated and also the earned income tax credit.
And who would those changes mostly affect?
Well, the stated aim in the source material is to influence the taxes paid by families, especially those with kids or folks with low to moderate incomes, trying to provide some tax relief there. There's also a proposal to extend the higher exemption amount for the alternative minimum tax, the AMT.
Ah, the AMT.
Yeah, extending that higher exemption could help some upper middle or higher income taxpayers avoid getting hit by that separate tax calculation.
Okay. And what about provisions aimed at businesses or investment?
There's another section focused on tax relief for what the bill calls rural America and Main Street. This includes things like special depreciation allowances.
Special depreciation, what does that actually let a business do?
Basically, it lets businesses deduct the cost of certain assets, like new equipment, much faster than the normal depreciation schedules allow.
Yeah.
The idea is usually to encourage businesses to invest more sooner by letting them recover their costs quicker on their taxes.
Got it.
And the bill also proposes changes related to opportunity zones. Those are areas designated as economically distressed, and the idea is to use tax incentives to draw investment into those communities. So these parts are framed as ways to boost businesses and investment, particularly in certain areas.
Are there other significant tax changes for individuals in there?
Yeah, quite a few scattered throughout. For instance, the bill proposes that if certain student loans are discharged or forgiven, that amount wouldn't count as taxable income for the borrower. That could be a big deal for people getting loan relief. It also mentions deductions for specific things, like interest paid on car loans for passenger vehicles. So that could lower taxes for people financing a car purchase. There are also potential changes linked to health savings accounts, HSAs, and maybe deductions for certain health costs, which affects how people handle healthcare saving and spending.
Okay.
And there are even proposed new rules about how tips and overtime pay get reported, which could impact both employees and employers in sectors like hospitality.
So across this whole tax section, it looks like there are adjustments affecting a real mix of people, families based on income and kids, businesses through investment rules, individuals dealing with student debt or car payments, people using HSAs, even folks in the service industry, trying to tweak tax burdens and incentives in a lot of different places.
That's a good summary, based on what's in the bill text, yes.
Mm.
It really does touch on a wide range of taxpayer situations, income types, expenses, and the fact that it also includes things like changing the tax treatment of firearm silencers or proposing a new tax on international money transfers, remittances offset by a credit for citizens. That just highlights how broad the tax changes are. It gets into some pretty niche areas, too.
Okay, let's shift now to the other major piece within that same title, healthcare policy. And this is where that healthcare innovation article and the CBO estimates really come into play.
Right. The bill proposes some pretty significant changes to major healthcare programs, particularly in Title XC4, the healthcare subtitle. For Medicaid, some key proposals include adding requirements for community engagement as a condition for eligibility.
Community engagement. What might that look like in practice?
Well, the exact details would depend on how it's implemented, but typically that phrase refers to things like requiring beneficiaries to work, volunteer, or be in job training to keep their Medicaid coverage. Other changes proposed for Medicaid include things like preventing people from being enrolled in Medicaid in multiple states at once, putting in stricter processes to verify eligibility, maybe more frequent income checks or needing more documents, and also limiting retroactive coverage, meaning it could be harder to get Medicaid to pay for care you received just before your application was officially approved.
And what about the ACA marketplaces, the Affordable Care Act exchanges?
The bill proposes changes there, too.
Yeah.
Things like limiting who can use special enrollment periods based on their income level. So if you have a life event like losing a job outside the normal open enrollment time, it might be harder to sign up depending on your income.
Right.
There are also proposed updates to how the premium adjustments, the subsidies that lower costs for many people, are calculated. That could change how much people pay for their marketplace plans. And the bill includes specific language prohibiting plans sold on the marketplace from covering certain services, like gender-affirming care, and also limiting coverage for abortion, with some exceptions.
So these changes, they directly impact the state agencies running these programs, the Federal Department of Health and Human Services, and, of course, the individuals who depend on Medicaid or the ACA marketplaces. Which brings us to the CBO estimates. What did the Congressional Budget Office find regarding these healthcare changes?
Okay, so the Healthcare Innovation article cites reporting, I believe from The Hill, which mentioned that CBO estimated this House-passed bill would lead to cuts of more than $800 billion from Medicaid and the Children's Health Insurance Program, CHIP, combined.
Wow, over $800 billion. That's a huge number. What did the sources say about the potential impact on people actually having health insurance?
Yeah, the article gets into that, looking at what analysts are saying and referencing some earlier CBO work. It points out that CBO had previously estimated that if those temporary, more generous ACA tax credits from the COVID era weren't extended, the ones making marketplace plans cheaper for more people, then nearly 4 million people could lose coverage by 2034. Now, this bill proposes its own set of changes.
Right. And how does the combination of these proposed Medicaid changes in the bill and the fact that those extra ACA credits are set to expire, how does that combination play out, according to the analysis?
Well, according to the article, health analysts suggest that putting the proposed Medicaid changes, like the stricter eligibility rules, together with the expiration of those enhanced ACA tax credits, that combination could put coverage at risk for a much larger group. Kathy Hempstead from the Robert Wood Johnson Foundation is quoted in the article, and she stated that this mix could potentially lead to nearly 15 million people losing their health insurance.
15 million people potentially losing coverage. That's
Yeah.
staggering. What concerns did the analyst raise in the article about what happens if you have such a big increase in the number of uninsured people?
Hempstead, as quoted in the healthcare innovation piece, talked about several potential effects. First, people without insurance often put off getting medical care they need, which can lead to worse health outcomes down the road and often higher costs when they finally do get treatment.
Makes sense.
She also mentioned that a larger uninsured population usually means more medical debt piling up. And for hospitals and doctors, she noted they could face real financial strain because they end up providing more care they don't get paid for uncompensated care. That could put stress on the whole healthcare system.
So the CBO's estimate of the funding cut to Medicaid and CHIP, combined with these analyst projections that draw on past CBO work about the ACA credits, it really paints a picture of potentially very significant impacts on health coverage and the broader healthcare system. That analysis from Healthcare Innovation seems pretty crucial for context here.
It really does. It connects the dots between these proposed policy changes and the potential real-world consequences for people's access to care and the financial health of the system, based on the estimates and analysis presented in the sources. And the historical context, such as it is in these sources, really just contrasts the situation with those temporary ACA credits versus the projected outcome without them, and with these new Medicaid proposals.
Okay, moving beyond taxes and healthcare for a moment, the bill also gets into education policy, right?
Yes, absolutely. There's a whole title dedicated to education. It includes proposed changes to federal student loan programs. For example, the bill suggests getting rid of subsidized loans for certain types of coursework.
And eliminating subsidized loans. What's the practical effect for a student borrower?
Well, with subsidized loans, the government pays the interest while the student is in school or during certain deferment periods. If those are eliminated for some courses, it means interest starts piling up right away, even while you're studying. So it makes borrowing more expensive in the long run.
Right.
The bill also proposes changing the overall limits on how much students can borrow in total, the aggregate loan limits. And it suggests altering repayment plans, which could affect borrowers' monthly payments and how long it takes them to pay off their loans.
Are there things aimed at the colleges and universities themselves?
Yes, there are provisions focused on what they call institutional accountability for higher ed programs. The idea seems to be to judge programs based on metrics like how much their graduates earn and what percentage of their students default on their loans, the cohort default rate.
So trying to tie federal recognition or maybe funding to how well programs perform on those measures.
That appears to be the goal, yes. Linking funding or eligibility more closely to student outcomes.
And I think you mentioned changes to 529 savings plans, too.
Correct. The bill proposes allowing money from 529 plans, those tax-advantaged savings accounts for education, to be used for more things. This includes costs for elementary and secondary school, even homeschooling expenses, and also fees for programs that lead to a recognized post-secondary credential, not just your traditional college degree. So it broadens how people can use those savings.
Okay, so I've got changes touching student borrowers, the schools themselves, and how people save for education at different levels. Just to kind of underscore the breadth again, what are maybe one or two other areas this bill hits that we haven't fully explored?
Well, like we touched on briefly, it definitely impacts energy policy through specific rules on leasing and resource management. And it contains provisions affecting the justice system, especially around immigration, often through funding decisions or setting procedures for the relevant agencies.
Now, we talked about the CBO estimates from the Healthcare Innovation article and that limited historical context comparing potential outcomes. Did the article mention anything about the debates happening in Congress around this bill?
Yes, it did touch on some of the related discussion. It mentioned, citing that Hill report again, that Senate Republicans were talking about needing to cut waste, fraud, and abuse in Medicare to find more savings, potentially going beyond the Medicaid cuts in the House bill.
Mm,
And the article also noted that some lawmakers were arguing that other big mandatory spending programs, like Medicare, should also be looked at as part of the whole budget picture. So it reflects that ongoing debate about where spending cuts should come from across different government programs. Just reporting what the sources said about that debate, of course.
right. So, bringing this all together, it's clear this bill is incredibly far reaching. It aims to make changes that would touch so many parts of American life and how the government works. We've talked about proposed shifts in taxes for individuals and businesses, changes to the federal workforce rules and benefits, specific funding directions for agencies like Homeland Security and Defense, rules for natural resource management, education policy from loans to savings plans, and, very significantly, these potential major impacts on healthcare programs like Medicaid and the ACA, with analysts suggesting millions could lose coverage.
That's a fair summary of the scope covered in the sources, yeah. And just to reiterate, our conversation today is based strictly on the information available in the bill text excerpts and that healthcare innovation article provided.
It is striking, though, how one piece of legislation attempts to connect so many different areas: taxes, healthcare, education, border security, environment. The CBO analysis really highlighted how changes in one area, healthcare funding, could potentially ripple out to affect individuals and the whole system. It makes you wonder, and maybe this is something for you, the listener, to think about. In a bill this broad, how might changes in one section, say tweaks to federal work rules or business tax incentives, have unexpected effects that ripple into totally different areas, whether it's the economy, social safety nets, or even our national priorities? It's something to consider when looking at legislation this interconnected.